Chavez, can you tell me today's Bitcoin price?
Today's Bitcoin price is at 38. Oh no, wait, it jumped to 40,000 US dollars in a second.
What? Bitcoin officially became the best performing mainstream asset in 2020, rallying from 7,300 to almost 30,000 US dollars. As rising demand continuously lets Bitcoin hit all-time high after all-time high, more and more people are interested if it's still a good investment or only the next bubble to burst like we have seen in 2017. Bitcoin was created in the middle of the financial crisis as a decentralized currency detached from the traditional banking system. Bitcoins are mined as computers solving complex algorithmic puzzles, which get harder over time to decrease supply. 21 million Bitcoin is the maximum amount of Bitcoin available. Currently 18.5 million already mined, but as it takes more time to mine new ones over time, the target date for the last Bitcoin to be mined is the year 2140. As most of you are interested if Bitcoin still can make you rich, let's check the facts and see if we can find a promising answer to the question. The initial idea behind Bitcoin was to create a currency which transactions are verified within the network without the need of any third-party institution like banks being able to manipulate its value. This guy made history on May 22nd, 2010 as he ordered a Papa John's pizza for 10,000 Bitcoins, equivalent to 41 US dollars, today's value more than 300 million, and tomorrow probably more than 350 million. Bitcoin evolved as a currency as it was mostly used for transactions on the black market as buyer and seller could stay anonymous, but failed to become a mainstream accepted currency as its volatility was and still is too high to accurately plan financial obligations. Today, Bitcoin is seen as a store of value and gold's digital counterpart, in which people invest to secure their purchasing power against inflation and hedge against stock market downside risks, or to get rich overnight. Although Bitcoin has gained a lot of media attention and steadily increased its market capitalization, it was still something for individual investors and more of an exotic investment alternative compared to stocks, ETFs, and real estate. Big institutions are finally starting to invest in Bitcoin and it becomes more accepted. Demand is now driven by mainstream adoption as more and more discount brokers like Webull, Robinhood and many more enable individuals to invest in Bitcoin within 5 clicks, as simple as you can order food on your smartphone. PayPal, the online money transferring service, announced that it enables users to buy, hold and sell cryptocurrencies. Additionally, it will enable cryptocurrencies as a funding source for digital commerce at its 26 million merchants. If you think we are done here, wait what's coming next. Even mainstream media reporting about Bitcoin, friends from high school, my weird uncle, like everyone suddenly asks me how to invest in Bitcoin. I don't know if that's a good sign, but it definitely shows that Bitcoin has finally made it out of the shadows to become a widely recognized and respected asset. Coinbase is planning to go public in early 2021, making it the first crypto exchange and Bitcoin broker to go public on the stock market. And even ETFs are planned for cryptocurrencies, making it even more convenient to invest in. Additionally, China wants to digitalize its currency to reduce its reliance on the US dollar, and Facebook is working on its own cryptocurrency called Libra. I'm calling from the year 225 as Bitcoin price currently stands at 500,000 US currency units. I want you to ask one thing. Why didn't you buy more Bitcoin back in 220? That's the thing with investing. You're always smarter in hindsight. Luckily, there are trustworthy experts and hedge fund managers that set price targets, which gives you as an investor insights of what could be possible in the future. Some say Bitcoin will rise to 150,000 US dollar, whereas others even say it will hit 6 figures and might be worth $1 million US dollars in the future. And I mean could be possible, because as history has taught us many times before, these price targets were wrong as many times as they were right. And one might remember the fall of Lehman Brothers or Wirecard, which no expert in the field could foresee. There's always a big if on price targets. They're just assumptions based on the information we have today. Fortunately, nobody knows what's going to happen in the markets tomorrow, because without uncertainty, there wouldn't be any risk premium for you as an investor to collect in the market. You're basically getting paid to expose your money to uncertainty. As Bitcoin did not prove as a useful currency for everyday transactions, many investors see it as an appealing investment alternative, often called the digital gold. A store of value. As long as other investors in the future are willing to pay more money for it, it's a solid investment. But there's no actual actual value behind it, no tangible assets like factories, buildings and so on, as companies would provide when investing in the stock market. A big argument in favor of Bitcoin is as central banks around the globe are printing money, causing fiat currencies to decrease in value every year, whereas Bitcoin with its limited supply should increase instead. Sounds logic, in theory, but isn't always the case, as I discussed in a previous video about gold. Yes, gold had an awesome bull run after the gold standard was removed in 1971, but it's not guaranteed, as we have already seen many promising castles in the sky falling apart like many companies did during the dot-com bubble in 2000. And even more interestingly is that the famous bull run in 2017 from 900 to 20,000 US dollars was largely driven by coordinated market manipulations using the stablecoin Tether, which makes me quite skeptical of its trustworthiness as a long-term investment. It's just a strange aftertaste and quite the opposite of the argument of being free from any third-party institutions like banks which are able to manipulate the market. For everyone not familiar, Tether is a cryptocurrency that's meant to mirror the US dollar. For $1 US, you're supposed to receive 1 Tether. It yet has to be proven or denied whether actually every Tether is backed by $1. Nevertheless, Tether Limited states that owners of Tether have no contractual right, other legal claims or guarantee that Tether will be redeemed or exchanged for dollars. In April 2019, Tether Limited's lawyer claimed that each Tether was backed by only $0.74 US in cash and cash equivalents. The latest increase in Tether's market capitalization indeed lets people wonder how much of that is actually backed by the US dollar and how much of this is driving up the price of Bitcoin. Bitcoin holds value because we give it value, much like the US dollar, euro and every other legal tender, which is not backed by something tangible. It's a social construct we all agreed on, and as long as we still do, it's fine. The initial thought of Bitcoin being an unregulated transfer of wealth might find an end as regulations are going to be tightened a bit. If this is passed, you have to identify yourself if you want to send more than 3,000 US dollars, and exchanges have to report your personal information when you make a total of more than 10,000 US dollars worth in transactions during a day. That's not only a pain in the ass for you as an investor, but also a bit ironic as it's completely against the initial thought of Bitcoin. Over the past couple of years, the Bitcoin price was a hell of a roller coaster ride, ranging from major collapses wiping out 90% of its value to new all-time highs and spectacular increases of 1000% and more. It's all good to know about these throwbacks on paper, as we're currently sitting on a new time high every day. But it's going to feel a bit different for you when a major collapse happens when you're fully invested. Frankly, if I would see my retirement money, aka Lamborghini funds, diminishing 90% in value, I couldn't sleep well anymore. Only because Bitcoin rose to new all-time highs in the past doesn't mean it has to happen again. But also because it collapsed every now and then doesn't mean it has to collapse again. As long as you really understand what you're investing in and not only FOMOing in because it's in the news or your friends are doing it, I don't want to discourage anyone to invest in whatever they like. Yeah, sure, it can hit 150,000 US dollars or couldn't go back to $5,000. I don't know. Nobody knows. I personally had quite a sum in Bitcoin, but already reduced most of it as it is not in my personal risk preference to be exposed to such an uncertainty with most of my capital. I decided to only invest as little money into Bitcoin, which will not affect my future wealth plan and does not hurt too much when it's gone. As most professionals advocate, the rule of thumb states that not more than 5% should be attributed to one single asset for diversification and security reasons. But that's again up to your personal risk preference and how much your future life plan relies on that money. I do know some people that have 90 to 100% of their capital invested into Bitcoin or other cryptocurrencies, and over the last 2 years it paid off for most of them. But I also didn't forget about all the other people who invested near all-time high in 2017 and lost a good amount of money. By investing in general, doesn't matter if it's in the stock market, cryptocurrencies or real estate, you get paid for taking the risk. You get paid for the uncertainty, and most of the returns are unexpected ones. If they would have been expected, there would not have been uncertainty, and therefore you could not have received any risk premium. Therefore, the only and most important thing about investing, especially when it comes to assets with high uncertainty, is to only take as much risk as you can handle. Investing is an endurance game. You will most probably play it over your whole lifetime, so it's more important to have a consistent saving rate and reasonable returns than outperforming everyone in one particular year and consistently trying to find that one golden nugget. Life is a game of compounding interest. It's like a marathon. I'm fascinated by the blockchain technology and hope that decentralized finance will have an impact on industries, improving all our lives. But when it comes to investing, just be aware that no one can foresee the future, and sometimes it's just a random walk. You hopefully see there are pros and cons, like with everything related to investing or even life itself, and no one can foresee the future, so the only sensible decision is to choose the right amount of risk you're willing to take. With that being said, I hope you do know more about Bitcoin and are now ready to make your individual investment decision perfectly tailored to your needs and values. If you enjoyed this video, feel free to leave me a like, and if you want my videos to pop up on your timeline, feel free to subscribe to my channel. Thanks for watching and enjoy the rest of your day.